You're live. You know what I'm saying? We're coming different, man. We're coming different. We're coming. Are these glasses straight? It looks. I can't tell if I'm straight or not. It's coming, don't worry, it's coming. Right, let's load this shit, bro. Okay, so yeah, it's live. Right, different segment. Right, I thought I would start doing alongside the weekly market view of how we're looking to take things next week. Instead of just doing that and wiping my charts, I thought, okay, let me actually film with the charts I had marked so I can go over it, and then I can obviously come back to this and see the improvements and did I implement what I've learned from this week in the next week. And this week was interesting. This week was the week prior, I lost a 100k account. I was over trading, and I was trading the lower time frames and paying very little attention to the higher time frame. And this week, I didn't overtrade. I traded the higher time frames. I traded with my list of confluences. And what happened? We won 2 out of 3, following the higher time frame trend. But there is there's 4 points that I'm gonna go over before I go onto the charts. The first on how I can improve next week is holding my trades. And I'm going to go over this on the charts in a second, but holding my trades with the weekly and daily trends, right? Because those are the trades I want to be holding when the market on the day, the trend for the daily is bullish, the trend for the weekly is bullish, and we've entered after a daily rejection, daily area of interest, all these things are lining up. Those are the trades I want to be holding. And those are the trades I need to acknowledge in the moment and be like, yeah, I'm holding these. There's a high, price may come out and stop me, but these are the trades that are worth actually risking that retracement, because it was Euro USD price shot up, and I saw a resistance after the news pushed it up, and I thought, okay, price is going to have a rejection from this area, right? Thinking I know. So I closed the trade. I thought, okay, we made some profits. Let's just secure this win. We closed out the other trade in a loss. Instead of thinking with that mindset of, okay, everything lines up here for a high probability holding position, right? All those confluences, like I just said, the time frames in check, the rejections from the daily area of interest, the weekly with strong momentum, all those things were lining up for a high probability holding position. And I closed. Why? Because I saw resistance. A resistance price is going to push down. You don't know that. I don't know that. So what I should have been focused on is the momentum, the trend. Yeah, price may come down and reject this area, but we're in a bullish trend. Price may reject it, create a higher low, and then break through it, and then continue that. I wasn't thinking like that. I was thinking of more rejection, drawdown. You see? So that was one big thing. Then, again, I just said it earlier, but not letting what I see on one market affect how I react to another market. Like, what was it? CAD JPY. We went from being beautiful, like 2% up, and then going straight into drawdown when that news came out. So just seeing that loss of profit, it affected my mindset to Euro USD, to seeing, okay, resistance, price is going to pull back, loss of profit. Let me just close here. But these are lessons that I can learn now and implement moving forward, because I noticed that aspect of that psychology kicking in, where I was letting what one market did affect how I viewed another market, which I need to separate. Obviously, there's a correlation, but they're completely separate markets with different agendas, different price action, different people trading them. Then point number 3 was Yeah, point number three was just not closing Euro USD at that significant resistance. Instead, my thoughts should have been, okay, strong push from the news that's in the trend's direction, key, right? The news pushed price with the trend, right? So it added fuel. The news coming out is just like fuel on the fire. The fire is the trend that's already going, and the news just came out and it just put even more fuel on top of that fire. So it went roaring, So we should have just kept riding it, right? It's still warm. Let's stay around the fire. There's no need to go and, you know, cut our losses, put our jacket back on and go to another fire. Let's stay around this one. It's warm. It's doing its job, right? And yeah, direction. Strong push from news in the trend's direction. Let's hold and see if price creates a higher low from that resistance, like I just said, or if price breaks through it, because the probabilities of price breaking through it and continuing to push up, and even the probabilities of price rejecting higher low and continuing to push up are much greater because of the overall trends, because of the fuel on the fire, because of the rejections, because of the EMA. Everything was lining up for the probabilities to push up. And then the fourth was using my patience, right, to wait for the daily rejection, because Euro USD and USD CAD, I entered before a daily rejection and I took a more aggressive approach. Whereas if I would have waited first for the daily rejection, then taken the aggressive entry approach on the lower time frames, not only will that one cut my stop loss, cut the pips on my stop loss, giving me a greater risk to reward to the same take profit, but combining that with holding the trades, that is a game changer. And I'm going to go over that now because those are the 4 points we had. I should be able to see this shit, bro. Yes, sir. Right. Starting off with Euro USD. Euro USD, you can see we graded the trade 70%, everything lined up that we needed. Weekly was bullish, daily was bullish. Area of interest, psychological levels, we're seeing rejections from, because this orange is not the trade I took. This is the trade after analyzing how I could have improved and taken this trade. But this, I'm just going to delete this for a second. This is the original trade I took, which was over here on this aggressive. I saw the 4 hour reject the EMA, the area of interest, the psychological level. So I took my entry. But this was before the daily saw this bullish candle, which was the rejection candle indicating, okay, buyers are present on the daily here. Now, after seeing that, that is when I should have been looking to take that aggressive approach on the lower time frames. So this trade here comes simply from analyzing, okay, this is when we had the rejection candlestick. That's what I'm waiting to see on the daily first. So then I scroll down to the lower time frames. What can I see, right? Well, first, the 4 hour is bearish, right? So we're going to go to lower time frames, looking for that shift of structure to indicate that the overall market is going to push up potentially. But on the 1 hour, this is where the beauty comes in, right? Because taking that intuition trading with the strategy trading, from what I learned from the previous week, is you can clearly see strong resistance here, right? It's respecting the psychological level and the area of interest. And you can see then, 1, we have a strong area. 2, the 1 hour shifted structure here and creating higher high, higher low, right? So all this in between is market structure. Then we see what a Morningstar Engulf rejection from the psychological level at 5 p.m. Beautiful opportunity to enter the trade around the very bottom, which has previously been rejected, as you can see. 1, 2, 3, shift of structure, 4 rejections with an entry signal, and you could even place your stop loss. So you see we have the lowest wick here, placing your stop loss simply just slightly below here. That's all you need. That gives you this beautiful entry, right? Which with the same, you can see where I closed at the same, if I would have closed it the same, it went from a 1 to 2, 2.5, 2.4 to a 1 to 4.5. Same take profit, just patience on the entry. And then if you would have combined the patience with holding the position, this is where the moneymaker comes in. Because when I'm looking at holding trades, right, I've learned this from previous times. Hold the trade until about Friday afternoon, because you don't want to be holding it throughout the weekend. So we just come here and we see where, okay, I'll mark it on the 1 hour to keep this simple. What can we see here, right? Friday, 7 a.m., 11, 12. Right, midday, you can see left head, right shoulder potentially forming. This could be the high of the move. So let's just say we even closed out here, right? We see this. What time is that? That's 3 p.m. I'm seeing that we have this, and now I'm seeing price start to pull back down. 3 p.m. we're closing. So we close at this point here. You can see a 1 to 6, right? Other position, 1 to 3.8. The big risk to reward, it's almost double the risk to reward for simply having a bit of patience on the entry. So we'll lock that. But that is the key. That's the key improvement factor that we could have used from EURUSD. But identifying, look at that left head, right shoulder, potential. Anyways, potential. And plus, it's Friday. We're seeing a potential left head, right shoulder. Market's had a big ass push. That is when you should be happy with taking profits. Not, okay, I'm happy with price had one big push. No, you understand, right? That the weekly, I understood this, right? The weekly had just created a little elbow, higher low, right? Morning star formation. Then we wanted to enter on that wick pullback and continuation to previous resistance. What did we do? We perfectly waited for that wick pullback, retested this area of interest on the daily psychological level. Everything was beautiful about the entry, just the little tweaks and improvements to catch that 1 to 6 would have been the patience for that daily rejection, and then scaling down obviously to the time frame that gives us the entry signal, but then holding that position until the end of the week, riding that strong ass momentum until the end of the week. Right, next pair, my baby. Oh, next pair, baby girl, is USD CAD, another market, right? This one was slightly different. This one was counter trend trading of the weekly, or you could have called it trend if you count. This is where it gets sticky. I personally would have just counted this as a higher high. You possibly could have counted that as a higher low. I counted it as bullish, right? But what I saw on the daily was one, huge ass resistance, right? Clearly respected support. Psychological level, what I should have interpreted is, we've broken, price faked out first. So what do I want to see first? I want to see price pull back, then reject, right? I did not wait for that rejection on my entry. I took my, wait a second. I'm not even sure when I took this trade. I took this trade over here. So yeah, I did take the trade Friday. No, I took this trade during Monday. I should have waited for the first rejection, and then I could have caught the entry afterwards. But this trade, like I said, It was retesting this area of interest, this strong ass support, which can then be used as resistance. We have the EMA coming into this area of interest with a psychological level, with the EMA, all those things just crisp together, retesting previous structure. Also, everything on the daily was crisp. We should have just waited for that rejection, a little bit of patience, and then you could have seen. So my first entry was 4-hour rejections, EMA rejection, psychological level rejection. And then I simply took, I think it was a 2-hour entry. Where did I fucking enter this? Where did I enter this market? I don't even fucking remember. What did I use to enter? This is why writing confluence is down. Is good because I can't remember what I use. 1 hour, 30-minute engulfing. This is why you write stuff down, my friend. Right? 30-minute engulfing, which was this cunt here. So that 30-minute engulfing, right? Understanding stop loss up above this area. I don't mind if price pulls back to this, pulls up a little bit more, rejects it. Because if price doesn't reject it and it simply smashes through, I'll wait for that higher low, then close the position. Tactics, my friend. But if I would have simply waited, right, had that patience to wait for the daily rejection, let me make this cleaner. Waited for that daily rejection, you can now see where, again, daily rejection. Shit, what have I just done? Right? So then we have that one daily rejection push down. Then we see price pull back up, right? And what, again, is that evening star formation. This evening star formation on the 2-hour rejecting an already solid foundation of resistance. That is, again, the key thing that you can see between the two trades on Euro USD and USD CAD. Price, we're entering with the lower time frames, the evening star rejection, but we're entering from an area of interest an area of interest that has already seen multiple rejections. So this is tested resistance, tested, and then we have that lower time frame giving us that morning star engulfing formation at the area of interest. Already rejected, already confirmed to be respected. Then that entry is just crisp. Stop loss was here. Stop loss could have been at the same exact level, or even just at that wick. It could have been there, 52 pips, just at the top of that area of interest. Clearly, price is respecting it. 2-hour engulfing. Yes, the market. No, you can see the market is still bearish, right? Because we have lower high, lower low. These are not structure points. This is simply just price fucking about on the push. But lower low, lower high. Then you see this evening star rejection at, again, that tested area, at where the area of interest, psychological level, all these things line up. Boom, entry signal. Granted, it's early in the morning, but I'm up all the time anyways, doesn't matter. You take that trade, now you see the entry alone is better. The stop loss is higher with a better entry. And right, so I'll just show you the comparison, right? Same, if I'd have closed at the same place, it would have been a 1 to 3 rather than a 1, literally double the risk to reward. Then it comes to incorporating the holding aspect. We see a huge daily candle close below this structure point. Okay, that's solid. What's the 4-hour doing? Continuing to push. Let's hold this momentum, even if it rejects here, pulls back. Let's see how it reacts to previous structure. Well, not previous structure, but this little minor structure, the EMA. Let's see how it reacts to those. These are the trades I want to hold, the ones that are pushing in line with the overall trend. The daily trend is pushing down, the 4-hour trend is pushing down. I'm only going to be trading with the trend of, how do I word this? Let's just say majority rules, and the daily and the 4-hour are bearish. So majority rules, Majority rules. And now we've just seen the news impact push price. So there's like a little hint that price intends on pushing down with these timeframes. The weekly's at an awkward point where it could have a, we could see price pull back deeper to the EMA, yada, yada, yada. But the daily and the 4 hour are indicating down. So we're going to trade down. We're going to follow this trend. And again, if we would have taken the same mindset of, okay, we're clearly pushing strong, let's wait till Friday, right? Let's just continue to hold this throughout the week. We scroll down time frames, we start to look for when we would close around Friday midday, right? Friday midday is around this area. So, we close, even if we close that lower high, you're still closing at a 1 to 6. So you see the difference there. I made 3% this week. The difference would have been 6 risk to reward. 12, that you would have made 10% this week from simply tweaking just that slight bit of adding the patience and adding the holding the positions. Simply just patience and holding. And holding comes down into patience to let let the market play out to the trend. And that would have closed, let's just say it closed 12%, 11% after swap fees and everything. Then we had CAD JPY, the one market that, okay, let's hold the market. You know what I mean? Let's do our thing. Because what can we see? The weekly is bearish. We're looking for that continuation, following the trend. Left head, right shoulder. We're following the market, following the trend. Everything's lining up. The 4 hour just shifted structure. Everything's beautiful. This is again a high probability market to hold with the trend. It just simply reversed on us. So this market closed in drawdown. But again, a lesson and a mistake that I've made on this, just second time I've done it. Don't close just because price is at your stop loss, right? A lot of people will say to do that. But what I'm learning from my own experiences, and it's proven to play out multiple times, is yes, price hit my stop loss, but price is going to need to make a higher low because price may reject and do this, exactly what fucking happened, right? Price would hit it. That higher low could be created anywhere between this and this point, which it did. It came all the way back into profit. And you could have acknowledged, okay, we just shifted bullish. Let's just close at break even, or let's just close here. Let's just close. Even if it was here, slight bit of profit, no loss whatsoever, that would have been a 12%. But let's just say we closed with a minus 1%. We made still 10% profit for the week. Madness. From 3%, that would have been an extra 7%. That would have been stage 1 passed on any funded account in a week. Me. That's me, bro. That's me. Madness. But anyway, that's all the analysis. The other markets, we'll go over those quick. Those are the 3 markets I traded. This market, left head, right shoulder, shifted structure. Now we're coming back to retest on the weekly. So we might have to see a weekly stop, yada, yada, yada. But the daily overall, it's retesting the CMA. I would, for a sell position, it pulled back very steep. But you see somewhat of an area of interest here, right? Support, resistance, EMA. I want to see price come back underneath this EMA or reject. This is next week's work, though. Next week's work. That'll be the next live. But anyways, yeah, the market, what I thought was going to happen anyways, break retest into this, never happened. Never took the sell. Just it didn't give you any opportunity to follow the strategy. Next pair, we were looking for exactly the same. Obviously, USD came out with a massive impact of it losing strength. So all these other USD pairs went flying high. USD JPY played out perfectly to what we were expecting. I simply just didn't enter. Why I did not enter, I don't know. I don't think I was paying attention. But you could, price shifted bullish, and I was like, but 4 hours still bearish, so I should have taken that into account. Waited for some type of shift of structure, some type of entry signal, but they all shifted bullish, so I was a bit turned off by that. And then euro, I thought it was going to push down at the beginning of the week, and then I saw all these rejections, and I started to see, oh, okay, we might be pushing up because it looks like a beautiful impulse correction retracement to an area of interest, and then which is exactly what's happening. So then next week we wait for that pullback on the daily, retest some type of area of interest here, look for that 4 hour and to the upside. But it's overall ugly as fuck. But that's the next lives thing. This one's already 23 minutes. Yeah, that's what we're going to be doing every week now, reviewing the marked up markets from the week we just had before scrambling all that shit and then looking at the markets. So you get an actual weekly review and then the weekly outlook. You know what I'm saying? Always looking to improve in all these different areas.